Good morning, good morning. So nice, I'll say it twice. Well, US equities had a session of two halves, dragging lower on weaker than expected unemployment numbers. Not so good, but then alley-ooped in late trade on regulation being wound back for the big banks, allowing banks to potentially free up capital. The S&P 500 rebounded 1.1%, and the Nasdaq scored 108 points, also 1.1%, but not enough though to recover from the prior day's losses. But after the close of trade, the US Federal Reserve made a big announcement saying that big banks would have to suspend share buybacks and cap dividend payments at their current levels for the quarter. Now, dividends will only be allowed to be paid based on a formula of the bank's recent earnings. Why? Well, the Federal Reserve has forecast loan losses in the US to amount to $700 billion, given unemployment has hit 19.5%, significantly putting pressure on banks. On the commodity front, it was good news though. The oil price scaled 2% high to $39.07. Gold shone 0.2% higher back to 7.5-year highs at 1,775. Copper coiled up almost 1%, and the iron ore put its foot on the gas as well, up 0.3%. Iron ore price now at $103. Now, what to watch today? Well, the Aussie futures are suggesting a 1.2% charge at the open, but local end of financial year selling is likely to keep us in check, particularly the US Federal Reserve's big announcement as well, which will keep gains in order, particularly given US futures are suggesting a hesitant open on Friday. Now, this is something that we closely look at based on how our session is likely to perform. Also, keep an eye out on big banks today, which are running at an end of financial year loss and expected to see mounting pressure following the Federal Reserve's announcement about rising debt levels. But keep in mind, CBA in particular, out of the big four banks, has been steadily growing their underlying income and its balance sheet remains in good shape. Now to some local trading ideas. Well, following Dr. Martens, Vans, Athlete's Foot, and Skechers shoe business Accent Group AX1 reporting FY20 earnings 10% up on the same time last year. Following tight cost controls, a focus on online sales and government support, Bell Potter has increased its price target for Accent to $1.80. Secondly, Citi increased Newcrest Mining NCM's mining valuation in WA following the mine maintaining production levels, which was better than expected. Now, NCM was maintained as a Citi buy. And thirdly, Macquarie was declared Bell Potter's top pick for FY21 in the banking sector, given it's got strong underlying earnings. Keep in mind, if COVID-19 didn't occur, its profit, or Macquarie's profit, would have gained 4% instead of falling 8%. Now, the financial year powerhouse, or the financial powerhouse, has $25 billion in equity yet to be deployed in infrastructure and other assets. Bell Potter targets MQG to grow to $135. I'm Jessica Amir with Bell Direct. Happy trading. Stay safe.